Just spice, everyone. Welcome to another Spicy Takes. It is episode 9. So, in case you've not been following, this is episode 9. And we do have a special guest with us here. But before we go right into introducing them, just, share with your friends, let them join us in. If you know there's anybody that needs to be here, just share the link so that they know that we have started. Share the link. Then also, yeah, I'm just going to take about 1 minute to just bop the community, let them know
Yeah.
that we are
Let
live.
let the Spice Chads know we're live. Get them in here.
Yeah, and if you are joining, just drop in a fire emoji. Let's know that you are here with us.
Oh
Just drop
yeah.
in. Let's get started.
Yeah, we'll give it about a minute. Let people flood in for a bit, and then we can get into it. I'm pumped. I was looking at just some resources on the topic today.
Hmm.
I texted RT before the stream. I had a bit of a revelation. So
An
I wanna,
epiphany.
an epiphany. So we'll see if it's dumb or not halfway through the stream.
Yeah.
Everyone
Okay,
can let me know
okay.
if I'm speaking nonsense.
We're gonna unpack that. Yeah.
Yeah.
Well,
So
you'll be
yeah,
happy
So
to know I only half read it, so it's gonna
yeah,
get extra
exactly.
spicy.
So we'll even get RT's live reaction to what I've already
Yeah.
messaged him because he doesn't read my messages.
So guys, yes. So let's just get started. If you miss
Yep.
any part of this, just know that it is being recorded. So you can always replay and join us anytime and re-listen after this also. So yes, we do have a special guest with us today. Hi RT.
Hello,
Welcome.
hello. Yeah,
Joining.
thanks for inviting me, guys. It's nice to get on here with you.
Yeah,
It's
thank
uh it's an honor and a pleasure. I've been invited a couple times, been too busy, but
yeah.
number 9 and DeFi incentives just felt right.
Yeah,
Yeah.
exactly. I feel like you're the perfect guest for that, and I'm really glad you're here. So we have RT, who is the head of growth and operations at Nirvana Finance. So please, can you just do a little intro? Tell us what you do at Nirvana Finance, what Nirvana Finance is all about.
Oh, can I? Yeah.
Yeah, you
So
can.
I started off as a holder in Nirvana. Their relaunch late December 2024. Big fan, and just got obsessed and was reaching out to the founder and getting on calls and basically just advising along the way and just really in the trenches with them on all these kinds of things. And there was a lot that I wanted to do and I wanted them to do. And finally, he just said, dude, could you just join the team? Like, I need some of this energy in the kitchen today. And I hummed and hawed for a little bit because I have 3 toddlers. And I was like, do I need this in my life right now? Can I handle this? And then a week or two later, I was like, hell yes, I'd like to get in there. So that's it. That's the origin story of joining the team. I feel
Mm,
like becoming, jumping into the founder's role, the team role, the exec role is just something I've been preparing for the last 8 years since I discovered crypto. So Nirvana Finance is proof of value wealth storage protocol, doing for liquidity in the market what Bitcoin did for money. So if you think about really where did we all start here, right? It was like these humans are greedy. It's hard to trust them when they have their finger on the button. They're always going to push print, 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 print. And that was the 2008 financial crisis. And that was the crux of the Bitcoin white paper and kind of what all brought us here. But it didn't solve for human trust altogether because as of right now, and this is not an attack on Bitcoin. I hold some. I'm a huge fan. It's going to carry the industry. It has been, and it is arguably there's no second best. Okay. But 90% of Bitcoin is held in 2% of the wallets. And the liquidity on the weekends is a little hard to find, right? Like we're still at the mercy of market makers. We're still at the mercy of exchanges. There's a lot of centralization issues that persist. And we're seeing that, we went into NFTs and there was the DeFi, can we smart contract? Can we program away from that? And it was like, oh, these evil VCs, they keep extracting from us with their vesting schedules and their pre-sales and their sweet deals. And then meme coins came out. It was like, screw the VCs. We're just going to do our own thing. And then what happened? the same kind of shit. Humans extracting from other humans, right? If you don't program this stuff in code and make it trustless, you're going to have these problems come back. It's not a banker issue. It's not a VC issue. It's not, it's a human issue. It's a human nature thing. And I don't even think it's inherently evil. I think everyone on this stream, if someone was like, you could have $10 or $1, and those are the only two choices, you'd be like, oh, I'll take 10. Like, we're here to make, like, humans are humans. They got kids, people got to eat. And I don't think you can get away from that, but you can code away from that. And that's really what happened at Nirvana Finance when they launched. And you have a protocol that at the protocol level takes the USDC in that's used to mint this on a token. And when a certain threshold of liquidity is reached, it reallocates that liquidity into a floor region. And that because all of the ANA in existence was minted using USDC tokens, the protocol has a full view of the supply. And because of that, and only because of that, it can guarantee certain things. It's a closed loop lending system. It can reallocate liquidity to a certain section, trying to break the floor price in ANA. You could sell the entire supply and every single one would be sold for that price or higher. Trying to break that, or saying, oh, will the floor hold, is akin to saying, when I type 2 + 2 into my calculator, is it going to equal 4? It's going to equal 4, right? Like the equation has been tested. It works. It's math. But it's not magic. It's not like, oh, this up only thing. It's just going to go up for, like, liquidity has to enter the system. And that's what we're going to talk about today with these incentives. Like, incentives are great, but if there's no volume and there's no users and there's no use case beyond the incentives, they will be farmed and then people will leave. And in this case, you're trading some liquidity in the higher part of the bonding curve for infinite liquidity at a lower part. It's not magic. It's just a reallocation. It's a reimagining of it. So that's what Nirvana does. And in this world of extraction that we are all a victim of lately, that's just come to the forefront where everyone's like, holy shit, everything's just PvP extraction. Yeah. I was really inspired by this new design. And I thought, I'm going to go all in. I'm going to marry my bags. So I am.
I think every time you pitch that, it gets better, dude. It's like
that was one of the better ones. Yeah, I'm excited to be on here, just fired up today.
I gotta disclose, like, I mean, it's not a secret. I'm a Nirvana holder. I've been posting about it on Twitter, but yeah, like as time goes on, I only get more excited about that. I think that's like a really cool parallel to draw between, Bitcoin saying no to some amount of value extraction, and that value extraction coming from how we manage supply. So issuing of an asset when you're allowed to, when you're not allowed to. Bitcoin is like, we're going to take the power tools away from the toddler, basically, and not let them just issue supply whenever they want to. But then there's still extraction when it comes on the market making sides. And the way that we buy and sell an asset can be equally as extractive as the way we issue the asset in the first place. And to me, that's like where my brain connects with Nirvana, where it's like taking another thing, like maybe the fire away from the toddler or something. Like, there's always other things,
take away the button, right? If you take away like the print more button, it forces the hand. It's like, well, we got to come up with another way to solve this problem. And the easiest way is to print money. And that's the one that's been used and it'll always be used. Look, let's not get it twisted. Market makers are not inherently evil. We need them. We rely on them. They create the market. Nobody else wants to do it. Like, if it was just about when Bob wants to buy from Alice, there would be an empty book. The market wouldn't function. The problem is when you are at the mercy of a market maker, especially as a new altcoin project. How many times have we seen that? Where you have a market maker who's like, yeah, I'll make you a market. You're just going to give me 5% of supply and $1 million bond. And if it falls below this price, which I control, I'm going to keep your bond. And then within 3 weeks, the price is below. They take their million, they nuke their 5%, and they're gone. And that has happened to multiple projects that I know of specifically. But it's not an attack on all market makers. But what if we could design a system that he didn't need the market makers? What if the math and code could manage the market? That's the goal here. That's what we got started on with crypto. Why did we go away from that? Or better yet, it just didn't exist yet. Nirvana's invented it. So, and it's not the first bonding curve. It's just the first one that manages liquidity in a way that unlocks all these other use cases. Look, don't get me started on the liquidation free loans and leverage, but let's talk more about the
Yeah.
incentives and all the rest. But yeah,
I mean, that as a theme, I think is what kind of guides my opinion on incentives in general, is like you're understanding the greed that humans have. You're understanding that people have a want to make money, and you're basically saying, how can I transition people's greed or just want to make money, which is very reasonable,
Yep.
into traction for my platform. Or even if it's not traction, sometimes it's just I need people to do the thing that helps my platform succeed, whether it's traction or whether it's liquidity provision or anything. You're just creating an incentive that turns like the want for money into the outcome that you want to have for your platform.
Yeah.
And that's the entire idea here. But what do you guys think about like the state of incentives in crypto, how things are working and which things aren't working, and where do you see kind of that space moving as we get more mature as a market?
I kind of want to hear from Nathan. I feel like I'm hogging up the mic here. You're just
It
sitting there
looks
like
like
waiting
he's
for your
I feel
shot.
like
This
he
is your
has-
shot, brother.
He has
Get
a
in.
lot to say, actually. He has
So,
just been nodding and nodding. So I feel like he has a lot to unpack.
Yeah, for sure.
Get in here, kid.
what is working and what is not working?
Your mic, well, your camera is not working.
Just 1 second.
Let's start
I'm
there.
raising,
Okay.
I'm raising my desk up. I didn't want to like.
He's
Yeah.
standing
The man
up
in
to
the elevator thing.
speech.
Yeah. All right.
That's a really hard question to answer. Incentive alignment is important, and if we don't get that correct, nothing really follows correctly behind it. When you were talking about doing for liquidity what Bitcoin did to money, it made me kind of reflect on something I once heard about Bitcoin, which was that you can never do Bitcoin again because the market knows how to game it. And there was this cypherpunk dream of like really doing good for the world, and the industry has really lost its way. It's there's a lot of greed, there's a lot of, I don't know, a lot of the ethos, I guess, has been lost. So what's working, what's not working? I think the chains function very well. They do remittance very well. They do verification and trust minimization very well. I don't know. It's a hard problem. Is this kind of tracking? Like,
You're tracking, dude. I mean, look,
there's not a lot that we're doing well outside of that. Like real end user products, changing people's lives. Like,
we're not there yet. We're not there yet. Look, there's a lot of good going on in crypto. I don't want to get too hung up on the headline risk that comes with everything, like this hack and that hack and the Trump coin and Melania. Like that's really what kicked off this. Like, oh my God, we're screwed. Like meme coins are ruined. They were always just a fun game and a fun way to do it. And they're still around and they're still going to be there. Although I'm not in the trenches. I hear that they're getting uglier by the month. Because it's interesting what you said about Bitcoin. You can't do it again because people would game it. They'd figure it out. Look, I don't want to get this sense of like everything sucks. I mean, there's a brilliant, like big crowd of builders that are doing some really cool shit. And what we know from crypto is that like the best tech does not always get the most hype, right? The most noise, right? Because it takes time. And we'll talk about Ampleforth a little bit today. Like they've been around since 2020. Arguably, we're one of the key leaders in like DeFi summer, and they're still cooking. They're still around. They're going live with LVAs, low volatility assets in the near future. They got spot cooking, like inflation resistant stables. Like there's some really cool stuff cooking, and I think I get a little bit fired up when I see the meme stuff kind of toppling over. Not like I like watching the world burn. I just think that as that speculative fervor exits the market, what's left in the rubble is value. If you survive the crash, like the things that survived the Luna and FTX collapses, you're like, damn, like Curve is still around, like the founder got liquidated on a massive, was $100 million plus loan that he had leveraged up and they got liquidated and Curve's still around. Like there's resilience there. And I think you just have these, these rising empires and then the rubble, and then from that rubble comes something stronger and hardened. And eventually I'm still confident that like there is a future of finance that comes out of all this. On what chain, exactly what product, with Spicenet, it won't matter what chain. But the point is, there's a lot of beautiful things being built. I don't want to get too, down the rabbit hole of like we've lost our way, which I agree in many ways, many have.
Yeah.
I don't even think people necessarily they lost their way. I bet the evangelist crypto cyberpunks are still right on track. It's just that 2 other million people joined and they don't have those same ideals.
Yeah, like
and that's
the ethos didn't die within like the OGs. It's like,
oh yeah, there's some maxis out there.
People came in and made it their own thing, and like they don't.
And so the noise has shifted.
Filters.
Yeah, I think the noise and like maybe some leadership, thought leadership, maybe has shifted. I just don't want to get too stuck in doomerism, because I agree with you. There's a lot of you're not a doomer. But I just want to make sure, look, I'm the same way. Like I was feeling I'll be honest with you, I'm gonna get personal here. I was feeling pretty dejected in like February, March, not because like price go down, we're all cooked, just because it was kind of the meme stuff that nuked us. Like it felt like there was a massive extraction event and value left, and like a lot of really interesting things being built that are actually providing like some pretty decent yields. And like how I see this stuff in 5 and 10 years, like what's still going to be around. They didn't get their time in the spotlight, and all the garbage did. And then of course, garbage dropped 95%. And so I was feeling pretty dejected. I was like, this is not inspiring at all. And then, so that's why I kind of ended up going all in with Nirvana Finance. And just to be clear, not all in financially, you should never do that. But all in with regards to my mind share and time and energy. This is just something that comes back to first principles, which I think more than ever right now, there's like a thirst for, there's a hunger for that in the market. And I certainly felt it.
I agree. I honestly think a lot of that sort of deflated feeling that people have right now and like the end of a phase of euphoria is largely in part due to these incentives, because you had a lot of bullshit propped up on massive incentives. So like you could be a player in the space in like, you come in like 2017 or whatever, and you could participate in a platform for a bit and get like an airdrop worth $100,000 or get yield worth like, 1,000%, but it's not actual yield.
Yeah.
So it's not so much now that like, oh, there's nothing happening, we're so dead. Like adoption continues to grow, and it feels like we're dying because yields are falling, but it's because the yields that we're seeing nowadays are more so like actual revenue being distributed to people. And over time, you're getting like a decrease in yields, but it's a decrease in inflation because those things start to get washed. And like Nathan said, people learn what the system is and they learn how to game it. And then it's no longer valuable for you as a project to be giving out these massive yields and crazy incentives, because people have figured out how to extract that and then move on and extract from the next place. So I think it's like, it's not like a deterioration in the industry, but incentives sort of make us feel as if it is that way, because you have like the incentive side of things drying up over time, which only makes sense. If you see like any traditional company, they do incentives as well if they want to capture users. They're just not as crazy as the incentives you see in crypto. And these are companies that have created real business models and been able to succeed without having to pay out and offer like $10,000 if you show up on their platform, right?
It's hard. Yeah, it's hard. Like you got to draw people in. Look, you should be building products that people need, that improve people's lives, that take a problem that is to be solved and solve it, or a problem that's being solved and you solve it more efficiently. If you're not doing that, then you have no chance of surviving long term. And if you are doing that, you probably need to like drive some incentives early to get some eyeballs. And then ideally there's a stickiness to it. And people say, whoa, like I would prefer to stay and use this regardless of these incentives. And maybe when they go away, there's enough. And we're thinking probably in terms of DeFi incentives at the app level, but let's take a step back and think at the L1 level. Like you got to incentivize nodes, and that's proof of stake inflation, right? Like there, I read this crazy report. I don't know if I can do a screen share. This is super doomery. No, I'm just kidding. But
Yeah, sure.
okay, let's pull this up. Y'all want to see some doom?
Yeah.
No, but let's look at this. I think this is it. Please be this. Yes. Finding things while live. Out of the side of your eye while listening. Okay, here we go. That's the right window. I found it, guys. I found it. This is so this is an interesting study. I should give shout out to the author, the DeFi report. Anyways, this is an interesting thing posted, shared by Mel from PowerChain with me a little while ago, just talking about the economic model. So anyways, I can share this on my Twitter if everyone wants to read it, but here's what I wanted to talk about. Basically, which L1s are effectively using token incentives? Oh, how on topic is this? Ethereum has spent $1.14 for every dollar in fee revenue in 2024. That's not bad. You're like, they're still underwater. I mean, we're talking about the GOAT, ETH, the OG, the one that is, the top of most metrics and the first mover. And they're still spending $1.14 for every dollar in fee revenue. But they're on their way, right? They're on their way. They're really close to being profitable from that perspective. Tron has spent 85 cents for every dollar in fee revenue. So I guess they're leading, and that makes sense if you look at stablecoin flows. Solana has spent $7 for every dollar in fee revenue. Not bad. The ones I brought this up to talk about were things like Aptos. Aptos spent $358 for every $1 of fee revenue in 2024. Whose money was that? And where's it going to keep coming from, right? Like they raised a boatload of money and they are burning it all on their validators and keeping them live. And so it's like, yeah, we're super fast and cheap. And I'm not hating on Aptos. I've never used it. I don't know too much about it, except for that it was quite exciting when it came to market for a lot of people. But that's not sustainable, right? They can't spend $358 for every dollar in fee revenue forever. That will run out. They will not be able to do another raise if that's their business model. So these are questions, like for Avalanche, I'm a huge fan of Avalanche. Even they're spending $62 for every dollar in fee revenue. And the idea is, like you said earlier, is you spend this money to incentivize actions on behalf of, in this case, infrastructure providers, in the hopes that the activity on the chain picks up enough to such an extent that you do cover your dollar in fee revenue with a dollar in costs. It balances out, and you've got to have enough runway to cross that threshold, and it takes years. ETH is still not there. Tron is there. That's pretty impressive. Although, honestly, I don't know a thing about Tron except for years ago someone said it was super centralized. I don't care. Clearly, the world doesn't care.
They had a run last year.
Yeah.
Was it last year? Yeah. They had their main season last year, and it kind of, main season is a coin trigger part of any ecosystem as it is. So they did have their run, I think, last year.
Yeah, isn't Tron one of the only coins that hit all-time high in this cycle?
Oh yeah, Tron the token is killing it. I was just about to talk about the tech, which I really shouldn't because I don't understand the tech. but if you're going to say Tron centralized, which I think some people have said, I've not looked into it. I don't think the world cares. If you look at the USDT usage, I mean, I don't have a chart for that. I wish I had a chart for that. Look outside here, but like everyone I've ever paid in crypto, typically, especially overseas, like they're all like, "Can you send me USDT on Tron?" That's just it's free, it's fast, and nobody cares if there's a centralized actor involved. So we're seeing what the market prefers. Anyways, I thought this graph, this study was really eye-opening for me, and it just makes me understand like that the clock is ticking even at the L1 level, because eventually it's not sustainable. You need to generate more than you're paying to keep these validators running. And the good news is most of these L1s, and that's why to run an L1 and launch an L1, you need to do a fat raise, because for the first 5, maybe even 10 years, you're just printing incentives and what is it, like $9 million a day in Solana inflation printed out to validators, and that's fine. They got to get paid, but eventually fees got to catch up. So it'd be interesting, and that's at the L1 level. At the DApp level, I don't know, there's 100 ways to skin the cat. What are your guys' favorite incentive models from a DApp perspective? We've acknowledged that you need something to draw attention and action most of the time. Which ones do you think are doing it well, doing it best?
I think there's a couple that have worked well. Like there's some obvious answers. Like VE33 has done a great job of bringing people into the system. VE33 I find interesting as well because it incentivizes more than just like, please show up to my project. It's like actually the incentivizing the governance and like the flow of liquidity, which makes me think that it might be one of the incentive mechanisms that has a reason to stay around. I don't see a lot of other incentive mechanisms having a reason to stay around. Once you're revenue positive and once you have all of the users, typically you should be building an experience that's sticky enough where if you take those incentives away, all of these people that are already using you are going to continue to use you. So I think like for most incentive mechanisms, it's a temporary thing, and then eventually you kind of wean off of them or you just end them completely. Whereas VE33 is interesting because you're actually incentivizing an action, and like it's sort of a circular economy where you need people to continue to direct liquidity into the places that deserve it. You're judging who deserves it based on who's willing to bribe / pay for this liquidity. And that's sort of a business model more than it is like an incentive flywheel that tries to bring more people into the system. And
When
then
you're talking about, not to interrupt, but when you say
yeah,
V33, do you mean a VDEX style kind of
yeah.
incentive model, or like Olympus style 3-3 game theory kind of?
Well, yeah, I mean, they kind of took it from like a combination of
escrow, yeah,
plus Olympus, right? And that's where you get these dexes. So that's like aerodrome, velodrome, but that is how they got it, right? From like
solidly. It's yeah. We're talking about Andre's solidly forks.
Yeah.
Aerodrome being, the big D right now, which I actually just picked some up last week. I was like, yeah, I'm not really trading as much anymore. I'm in kind of founder hat, team hat on right now, but with base and circle and this genius bill, I was like, okay, Aerodrome, I'll take a bag, weekly W's. But look, I am in a DeFi chat that makes me feel stupid. Messi and a lot of my buddies like Noah Seedman, Captain Rational, like these guys, they eat, sleep, and breathe cash flow and DeFi, and they're so bullish right now on some of these more like OG DeFi names building and coming back. Not, coming back, that in many ways you talk to the team, they'd be like, well, we never left. It's just like the spotlight shifted. And at the end of the day, value will persist, value will survive. Things that, again, produce a product or a service that do it better than anyone else or preferable. Like that's the kind of stuff that I think just persists in the end, and that's where they're at. The reason I bring them up is because I was literally watching them have this conversation today, speaking about like liquidity, LQTY, liquidity V2, and Aerodrome, and some of these other V33 forks. Like these are the guys I listen to when I'm trying to like figure out what's going on. And I wish I could talk about it at the depth that they do. I will simply point you at a few tweet threads that they shared if you guys are really keen to learn about this stuff. But I think if I had to pick an incentive model right now that's, like V33 is pretty strong. Personally, the lock stuff bothers me. And I just say that because I've never made money on something after locking it. But I think you can. I know a few of them have locked, pretty heavily into things like Aerodrome. And, they're just printing cash each week or incentives through the bribe markets. Like there's a lot there. To love, and maybe in the future we'll get on with somebody that's really deep in the mud on that, deep in the weeds. Look,
for Aerodrome's case, just quickly, like they have taken off the most as one of these dexes, and they're still not quite past that threshold you talk about of earning more revenue than incentives they're giving out. So I thought that was pretty interesting. Although they're getting pretty close, I think they're earning about 70% of revenue that they're giving out as incentives, and I wonder if like the model is sustainable if they do surpass that. I think there's a chance that it is. And it is interesting because the lockups make it so that you're avoiding a lot of the sell pressure, and you are incentivized to keep locking to continue to keep your ownership your percent ownership over the supply, right?
Yeah, well, getting your multiplier too on your vote weight and your bribe size. Yeah,
absolutely. And the
for you
model does
guys.
that well. And then I think where the model struggles is like when you do get a sell-off, it's really aggressive. It really hurts because people have been building up this supply over a
very
long time.
reflexive. Yeah.
So then these sell-offs are really painful. And that's what I texted you about before the stream was like Nirvana is all about being able to lock in value once value flows in. And my brain,
I'm reading what you,
my brain just went, what if you had a V33 DEX backed by an asset like Nirvana that has a floor price? So you lock in a decent chunk of that value so that when that sell-off comes, it can't hurt as much as it does on Aerodrome.
The only problem with that is that by the very nature of E33, you're printing incentives out of thin air, which is like, again, it's not, this is evil, but you can't print a floor asset.
For sure. You could potentially do it with the option token.
Yes, you could. Yeah, I mean, look, I'd love to model something like that. Our next product launch is Samsara, and it's coming out. It can be built on top of essentially Nirvanifying every token on any chain, and you could do it with LP tokens. JLP could go in there, and that could be your base asset that has an up-only floor base. And then the derivative that comes from that. Zen JLP. Could there be something here where people take this product and bake in like a V33 style DEX on top of a up only floor type rising asset? Like maybe, but I'm not going to figure it out on this call right now. But like these are the kinds of things, it's a DeFi primitive. It's a new set of tools that smarter people than us will come along and say, here's how I could maybe use this in a financial application. I mean, I'm fascinated at the potential that you just talked about, but my first thought is like, I'm pretty sure like Aerodrome uses emissions to drive incentives and then bribes and the rest. I don't know if you can actually you're right. Like through the options token, you could have emit the options token and Delta gets crushed, but does it is it better than some other option for whatever? That's the thing, right? Is it going to be better than Aerodrome? Is it going to be better than does it survive past that incentive stage? That's kind of what we're talking about here. I don't know, but I bet there's a team out there that's going to try. I'm excited to watch them.
I'm excited. I want to see that happen.
I think it's a cool idea. There's never been an asset in the world that has a immutable, algorithmically assured floor value. Like it doesn't exist. Now we've had things that say treasury backed floor. Oh, Luna, awkward, awful PTSD from this concept, right? Like it's never worked before. Imagine my job right now is to try to grow this brand based on a promise or a concept that has never, ever, ever, ever worked because it's never been done this way. It's never been done where there's zero supply unless it was minted with this, when you have a treasury going back to Ohm, Wonderland, things like this, treasury backed, but it was humans controlling that treasury. We didn't solve for the real problem, right? The real problem, bless his heart, I love him. He's a friend of mine, Danny. He was asleep one night and the value of time or wrapped memo went below the floor value. And a lot of people on Spell, one at Abracadabra got liquidated and they woke up. He's like, oh, my bad, I was sleeping. You need code to back this stuff. And I have no doubt that he understands that now. And this is it's just a new era. This protocol, it's a first. So I'm excited to see what gets built around it because, but we've got to get through the PTSD first. Try having this conversation with somebody. They're like, sounds like you're describing something that's never worked. Like I am, but this time, trust me, bro. But you don't have to, right? You look at the code. We have a lot more explainer videos coming out, more materials that will help people wrap their heads around it. Because once you have a little time and you put some thought into it and you dig into some of these things and you talk with guys like Sid, our founder, and when he looked at me once, he's like, I'm so bored of this conversation from his perspective, because it's literally like trying to say, well, if I type in 4 + 4 on this calculator, is it going to say 8? And he's like, yes. It's just it is it's because of the design, it is that simple. It's not easy to design, but it's a simple concept. So I'm pumped for breaking through that mind share, because right now it is very much stuck in like, let's not play that game again. That game almost killed us. This whole floor back, treasury back thing doesn't work. Well, it could work. It just needs to be managed by math and a smart contract, not by humans and trust. And you can't have volatile assets backing it. And we've solved for all that. So yeah.
I think, I mean, also Nirvana has like an incentive model as well, which I think is a sustainable incentive model in the options incentive. And I think this is going to become more common as the industry matures as well, because the option incentive pisses half people off. And the people that it pisses off are the ones that want to show up and extract value.
Yeah.
The ones that are actually long-term aligning with projects actually like option incentive models. They're like, this is my way to get more exposure to a project over time and get it at a better price. So they're happy to do that. And you're locking in basically the people that you actually want holding your token. You're rewarding those people. And then for anyone that wants to just like take their incentives and run, you're not letting them do that. So I think the options incentive will definitely catch on more as we go forward as well. But Nathan, I know you said there's like, I forget what the DeFi project you picked up a bag in, but you were telling me about it a while back. And wasn't it like some sort of like an incentive yield project?
Oh, I forget about these guys.
Nathan did something aside Bitcoin. I'm shocked.
These guys were called retarded APR.
Is that the name of it?
Yeah, retarded APR wrapper was the token. So they had a dual token design. They had an extremely scarce one, and then they had a common extremely high yield, like 400% APR. I thought it was a really interesting design. And then they were creating a pump fund competitor. There was a lot of staking mechanisms involved, different lockup things. But that project ultimately died because the founder literally shit talked everyone. And, we're talking market makers. There's a cabal of people who tend to launch the most coins. And he was beefing with these guys, killed some of the best B2B connections he would get and never went anywhere. But I thought that was kind of interesting. And I did have an earlier question. Incentives rule the world. And we're talking a lot about like what incentives we like, but what products have you seen that have such excellent product market fit that you don't need really strong incentives? Are there any projects that really come to mind? Like Tether's one, right? They keep all their money, like meticulously designed, brought to market, something like that.
Yeah, I mean, another way to phrase that is like, what successful companies exist in crypto that don't share any of their profits or revenues with their holders or users? Probably an easy way to ask that. And Pump.Fund comes to mind. They don't share anything. I think they might start here after their 4 billion val raise of $1 billion. There might be something there, but like they produced a product which was a weird no rug launchpad that rugged a lot, but like not completely, like, you know what I mean? Like there's still money locked in that LP. It's just all this token that's not worth anything. They solved for something. I don't know. Do I sound dejected? I've only ever lost money on meme coins. But like, they were very successful and profitable. Exchanges are an obvious one, right? Product market fit. Look, the casinos winning. Is there any financial applications that have gotten past an incentive phase that haven't just then fizzled out? I don't have a handful in mind. I'd be curious. I mean, I'm sure there's one. I'm sure there's some, but I think that's why people are getting dejected, because they're realizing there's not many, if any, that have got, like, they're not giving out incentives. There's a lot of users. There's a lot of flows in the,
Now this brings
damn it with the hard questions, Nate. It's not a trick question, but it's not easy to answer. Like there should be some.
Uniswap, they didn't offer incentives in the first place. Are we saying ones that didn't have to offer incentives in the first place, or ones that?
Yeah, basically, because like a lot of these yields are like venture capital money plus whatever you got. You know, Avalanche paying 400% for customer acquisition. Like it's just kind of interesting, unsustainable. It's a kind of a hard problem not a lot of people are cracking, and it's a pretty consistent problem at like the L1 or the blockchain, the DApp level. You see a lot of assets doing the same kind of play. You know, for Circle to stay dominant, they give out something like 95% of their revenue. You know, it's, you know, and you know, you said it very plainly. It's a very traditional business model. Like have a very tightly designed product market fit, make very surgical, intentful kind of moves to bring it out, and you don't need to give it away. But the easy way is to give a lot of your shares away. So it kind of seems to be like a compromise to me. But you know, the universe runs on incentives. So like at some level, the incentive there is this is so good you can't say no to it. Versus, hey, we'll pay you to use this until it's such a habit you can't get away from us. It's kind of
it's like a pretty standard even in Web 2 stuff, like sign up bonuses. You know, come use our sports book. We'll give you $100 match on your first deposit, and hopefully next time you want to be a degenerate gambler, you'll stay and do it here. And a lot of them do. A lot of them actually don't, and they just they go sportsbook to sportsbook grabbing those $100. But it's obviously a profitable model, or they wouldn't use it. What's ironic is that the casinos that are being built, the thing that has found most product market fit with crypto is speculation. You know, we've all come here to make money. Nothing wrong with that. For a lot of people, it's worked. And so the picks and shovels that allow us to do that, like they're printing, but we're here speculating on the next thing, like an actual app that will be the future of finance. And so far, nothing has quite hit. I think there's a lot. I don't have a list. I wish I had this question in advance. Damn it, Nathan. No, but like I think for our sake, the conversation would be a lot juicier if we had like a list, because there's definitely companies out there, I would think, that are profitable, that are more than just the picks and shovels exchanges and stuff. There's a handful for sure, if not just in payments, something else. But for
not to interrupt, but it's funny. I thought the same. The picks and shovels are probably the largest non-casino segment, like oracles, indexers, RPCs. These guys, B2B focused, they seem to have an easier time kind of.
Yeah, well, I didn't even think of them, but like, node operators, for example. But again, like the main energy here at the user level is still speculation, and that's fine. Yeah, I'm a speculator myself. I love it. But at some point, we need a product that randoms will come and just use, not because there's incentive upside, not because there's a speculative upside, because it is easier to use and better and cheaper and faster and more decentralized, whatever, like optimal versus what they're already doing in their life, whether it's paying their rent. I'll give you an example. This doesn't exist yet, but I'm going to give you a really cool example. Tari is a confidential by default chain, POW chain, just launched. You can download Tari Universe on your computer and just be mining this stuff. Okay, very cool. Because it's confidential, and I say that it's like a privacy chain, essentially. It's not, it wouldn't brand it as the privacy chain, but it's confidential by default. Now, when you have confidentiality, first of all, that's going to be the future of finance. Nobody's going to build mainstream apps on a thing where you can look in someone's wallet every time they send you money. Like imagine thinking that like what's the word? Surveillance chain is going to be the future. It's just not. You're going to need confidentiality and privacy. Okay. Here's an interesting app that's going to be built on Tari. This is actually why I got so excited about it. Payday loans industry, $400 billion a year. I pulled that out of my hat. I'm pretty sure it's close to that. $400 billion a year based on an industry that just pays you money at an insanely high interest rate for a week or two until you get paid. And then you go pay it back with the interest. That's a pretty big industry. And it exists only because people have a gap between when they work and when they get paid. What if you could get paid in real time? Crypto would allow that. Stablecoins would allow that. The apps we use, you could imagine it's pretty easy to clock in on your blockchain enabled app and you get a live drip of pay while you're on the clock. And then when you clock out, you walk home and you tap your card to the gas station and you're paying. You don't need a payday loan ever. $400 billion industry gone. People would use that. You could create a gig marketplace right inside of there where it's like, oh, I'm in McDonald's, I'm Starbucks. Like, nobody cares which one of those they work at. They need a job. But all those places need those people to hire. So you have a marketplace for hiring. And right inside of that, you have this live pay. This is an app that could be built on such technology that we are, innovating with. But it would need that privacy piece. Nobody wants to get paid by something where everyone can look in. So that's one example of an app I'm super excited about that's coming on Tari somewhere probably in the next year or two. But like these kinds of ideas, when I hear them, I'm like, damn, like it's still so early. Like, because that's an app that solves a real problem that people would use, and they wouldn't be speculating on the value of a token. If that app even has a token going up, it would just be like, I need to get paid and I don't want to take a payday loan because I'm getting bent over backwards with 400% interest rates, like whatever they are. Like, it's insanity. That's the one example that comes to mind of like how you could take all this sauce and all this blockchain magic and roll it up into something that's like super useful for somebody who doesn't give a shit about speculation or crypto.
I mean, I think there's
definitely
definitely
hundreds of examples, but that's the one.
Yeah, I think there is like a shit ton of examples or potential examples for tech that can be built that's actually going to serve the everyday user, and not just so that they can buy in long and short meme coins, right? Like,
yeah.
The reality of it is like bringing assets onto a chain where it doesn't matter what time of day it is, it doesn't matter where you are, you can access these things. It doesn't matter who you are or how much money you have, you can access these things, is going to give such a greater level of accessibility and permissionlessness to finance that, most people don't have the luxury of, and eventually like they will want to have that luxury, especially if all their friends do. I think it's just a matter of making that accessible enough to the user where like they don't have to take all of the bad parts of crypto with it, like figuring out how to manage their own key pairs and
forget about it. Yeah.
If I like send money to the wrong wallet, it's gone forever. Like,
yeah,
nope. Those things need to be reduced and then make the products much more accessible. But I think like RWAs is easily a great sector that's going to find product market fit without having to incentivize people, without having to force them to use your things to speculate on something. I could just be an investor in the United States and I want to invest in an expanding economy like Dubai. And there's going to be a market for that. And stable coins is a really good example of that. I mean, stable coins is the one that has taken off and hasn't had to incentivize people. And that's why, because there is an appetite for the ease of being able to transfer US dollars across.
I got to move money. You made it easier. It's cheaper. I'm going to use it. I don't care. It's a stable coin. It doesn't, but the rails backing that are becoming very valuable. And this goes to what I was about to say, like you want to talk about doom? You want to talk about doom? The winners of all this future of finance shit may not have a token that you can buy. Like that pay as you go app or whatever, the payday loan app I just described. Like, I don't think that'll need a token. Can someone buy equity in it? And like there'll be some real value created here. I think the thing, if there was anything as a VC, I ran, founded self-funded VC syndicates. I don't want to say like big bad VC, but like essentially if you imagine a group of people getting together to pool their network resources and time and energy to create something and invest and help teams, that's Magnus Capital. That's my fund. And the thing that keeps me up at night with that hat on is like some of the biggest winners that are going to come out of this may not have tokens. They just may not need them. The token is a great fundraising mechanism. And then a lot of teams are working backwards. They're like, all right, guys, we raised money. Now let's see if we can drive some value to this token. Like, it's just, we didn't need it. We just needed money. And that's just the reality of the market.
I definitely don't think you'll need to have like equity and a token and then have two separate things. Like, it either makes sense to have a token and you should drive value to that token, or you should just have equity and drive value to it. I think we actually will get to the point where that equity exists as a token on chain, just so everyone can access it.
Tokenized.
Yeah, like there's no reason not to tokenize it just to make it more accessible. But it doesn't have to be like a crazy utility token and you're making up a reason to have this utility token. You can just have traditional equity and tokenize it to make it more accessible. And then just focus on providing value towards one thing. Like don't sell a token and then be providing your value to equity that you're putting into your own pocket, because obviously then the token isn't going to be worth as much as the
no,
equity.
and that's, yeah, we learned that the hard way a few times, like investing in a thing, getting a token deal, and then finding out they had an equity, and they, you know, like this is trial by fire. We live and learn. You want a spicy take? What about tokenizing revenue?
I don't even know what that means.
Tokenizing revenue. Like, okay, here's a DeFi application. Nirvana has generated $500,000 in fee revenue since launching in pretty much like mid-December. And a portion of that revenue goes to Prana stakers. If you buy some ANA and you stake that token, you start generating Prana tokens, and they can be exercised for cheap Prana, or cheap ANA, like you can have it as an options token, or you can stake it, the reward token, and you start earning a piece of this revenue. So it's essentially just tokenizing the revenue. And that's what I'd like to see. I mean, that's where this token actually, tokens in general, if you have a cash flow business that you are running, Pump Fund could have one if they wanted to. They don't need one, clearly. And why would you give away all that? But there's a lot of these, whether it's DEXs or whatever, and the buy, sell fees, whatever, there's costs of doing business. The project, the protocol, the treasury, the company receives all that revenue. You could tokenize it. And there's a lot of DeFi projects that are doing that, where, they say buy our token and stake it, and you can have a piece of our action. And I think that's the future. That's the beautiful future I'd like to see with this kind of decentralized stuff, where you're building at a protocol level something that can be owned by participants, by users, and not just sitting there saying like, I'm going to hold on to this tokenized revenue and print, but like they're probably using it too.
Okay, I'd like to drag us back a little bit. We kept saying something about USDT not being incentivized, right? But there are a lot of protocols, or let me say some protocols, that their selling points of you holding USDT, they'll tell you, oh, do you know that rather than you holding the normal dollars, you can hold USDT and hand yields on that. So is that also not incentives at the end of the day?
Yeah, that's not incentives that you're paying out of pocket as much as like you're just making a market in which people can take their USDT and turn it into more. And that's business, right? Like there's so much that's been built before crypto exists. That's the proposition is you give me X amount of US dollars and I'll figure out how to earn you more US dollars with that. And I think like that's pretty standard. It's separate from like incentivizing somebody to come to your protocol and trying to get users through the gate. It's just like, if you give me your USDT, I can turn it into slightly more USDT by doing something productive with it.
Well, you can do that right now, like USDC on Coinbase. I'm pretty sure if you just hold it naked on there, you're just automatically getting like your T-bill rate of like whatever 5%.
Exchanges that offered about 40%. I worked with one that offered up to like about 40%. The last 3 years. I don't know if you're on around 28-40%. They kept reducing it and it fell to around 28%. And it was around that before I left. So also, okay, you wanted to say something?
I was just gonna say, like that they probably have to be paying you a little bit out of pocket.
That's not too sustainable. I mean, look, the core rate in the world, that risk-free rate is living in what, 4 or 5? I'm not a macro bro, but there is this kind of global rate that underpins the economy via inflation. I think, I don't know. I'm really not an economist, but so this idea is like, can you beat that rate? Imagine you could. If there was a place in the world that was scalably able to produce a 20% yield on dollars and it was sustainable, it would grow to trillions like in a few years. Yeah. Good luck solving that though. Like that's just, I don't think that exists. So when you say 30-40%, it's like, well, where's the yield come from? This is the age old question.
immediately change the entire world. Like that would end up being the backbone of everything.
It would just, but
Yeah.
even at a global scale, I just don't think it scales. Like you'd probably win a Nobel if you invented that.
Yeah.
But you can have that short term. Well, if you have imagine this: Binance, super popular place to trade. I think they're still number one by a long shot. And if if they decided to just decentralize all their profits, I don't know why they would, but yeah, they could probably pay all the people holding dollars on their exchange quite a bit. And that yield would come from the revenue backed by their business. It's just, I don't know where I'm going with that, but I'm not surprised.
And they wouldn't get to make that money. So.
Well, I'm not surprised that place that was paying you 30-40% is no longer paying you that. Let's just put it that way.
Yeah.
I could see that being an attractive way to draw dollars onto a platform. And it's usually, I'd be very curious before I put money onto something like that. Nexo was an interesting place to get yield. I did a bit of that. They were paying 9 to 16% at some points during the bull and bear. I didn't ask where it came from. Probably should have. Probably should have. I did pull my money eventually, but yeah. Oh, there was FUD. There was a lot of FUD. We pulled our money off of that one, but I don't know. I am out of things to say about this. Next question.
That's actually been a very, very interesting spicy takes, I must say. But we've spent a lot of time. We've spent at least 1 hour here. And normally we do spend about 40 to 50 minutes. Damn. So, but I would not just want us to go because I can see that we are having fun. So I'm just going to give us a little around 5 to 10 minutes to round up, and also open up the comments for people to ask questions. So if you have any questions, just drop them in the comments while we try to round up here. And for those that joined late, we are talking about incentives in DeFi. Is it value or deceit? And if you joined late, know that this is being recorded, so you can always go and listen to the recording. This is actually very interesting. You will really want to listen. So this brings me to my last question. I know we've been saying a whole lot about incentives, and this simply means that incentive is actually integral part of DeFi as a whole, right? So can DeFi survive, because it's really dependent on incentives? Can it survive without incentive? If we remove the incentives, are we going to onboard people? Would that be possible?
Yeah, we'll have to. We'll have to build products that can survive without incentives. It'll just, I think it'll mature to a point of the incentives are just to be competitive against the other people providing a similar product. It's like the gambling market, like RT mentioned before. They'll give you a deposit to come and bet on their sports book, and they're not just throwing out a bunch of incentives to try to get people into that industry as much as it's just like, if I'm a newbie and I already want to enter that industry, I'm trying to decide which sports book to hit up. That's them trying to be competitive. And that's the point that we'll reach. Obviously, every really solid application for crypto that we find is going to have its way of bringing users in without incentives. And then once 20 people try to build that application similar, we're a little bit faster, we have an edge in this way, they'll actually try to use the incentives to compete with the other people building those products to bring in users out of the gate and solve their cold start problem. But it's not going to be, incentives isn't going to be the thing that creates adoption for DeFi. It doesn't have the ability to do that over time.
Yeah. I mean, this is going to the shiny new toy thesis. Like, there's always a bull somewhere. The market's going to be the market. How's that for 3 vague things to say to open up here? Look, the market's not going anywhere. I can't wait to watch the next 10 years unfold. I mean, I can wait and I will, but I'm excited to see it happen. And the thing is, right now, there's not been, to my knowledge, more than a small handful. I'll give credit that there's something that I don't know off the top of my head that exists. But these incentives, they come out, they're hot, they're sexy. There's a run up because it's a shiny new toy, and there's a rundown. You guys have seen this on pretty much every chart ever in crypto, and I'm not going to name drop that token I was about to name drop, but there's a few that we all know well, and they just run up hot and they run down, and then they just struggle to ever find that again. And that's pretty status quo. My point being, like, but there's going to be a new one. And you know, each cycle we come back, and you just have to be different enough to convince everyone that this time's different. And I am still optimistic that sometime something will come out that actually does solve for these problems, right? There was ICOs in 2017. It's like, oh my God, this is amazing. Like, we're going to be so rich. And like everything went up. And then it was like, oh man, like those vesting schedules were crazy. And then sort of like, and everyone started talking about FDV in 2020 because they found out the hard way that, oh my God, there was like a circulating supply that didn't exist yet. And now it does. And these are all worthless. And then NFTs came out. This is new. This is exciting. Maybe this is the future of finance. And there's oh, damn it. And there's a few that'll survive. And then meme coins, you know, DeFi. Like, so if we want to see another big fun alt season rally, we need something new. It's not going to be the same old thing again. You know, there'll be maybe some sector of meme that'll come out, but even that starting to look like that lower high loop de loop of value extraction. What is going to be the new thing that convinces enough people that we've solved this, that there's sustainable value here, that I don't have to rush to sell every little move up because that's just the status quo now, like PvP. You need something new. You need a new design. And you know, I think showering incentives everywhere is going out of style pretty quickly. It's still going to be used. You're still going to have to incentivize arrivals, but you know, you guys are solving a very real problem, which is blockchain fragmentation, liquidity fragmentation. I have high hopes for you guys and what you're building, and loved watching it evolve. Nirvana is absolutely doing some things very new, very different way, like programmatically encoding the anti-value extraction like model, but it's giving something up and doing that too. There's no incentives. There's no showering on tokens from the heavens to give to people to make them come in. There's no window dressing. You got to come in and figure this out. And I think when people do, they will be inspired by a potentially new thing, right? Like an entirely new paradigm of potential. And that's why I'm here working on growth.
Definitely, yeah.
And that's why I said yes to your show, because you guys are doing it too. Like, there's some real shit going on here, and it's going to ideally, you know, reinvigorate investors, speculators, holders, users. Like right now, and there's a lot of good innovation happening. It's not just us, but it has to be something new. The same games don't work twice. You know, ICOs. Maybe there's a new ICO of a different type of token, but for my money, the cycles only come back when something really exciting and totally new happens to reinvigorate. Like, this time is different energy.
I definitely agree. It's like a lack of pushing the needle lately that has not had us seen like a wicked bull run in the alt market. It's always got to be somebody push the needle and create like a brand new narrative, and don't have that narrative be about like incentives. Where can I go for a second to flip a quick buck? The narratives that actually drive this market higher are ones that people see as changing the world. And I think the ones that have driven the market higher, like, have been ones that have changed the world. And we are seeing those stay around. And I agree with what you said, RT. Like, it's what excites me about Nirvana. It's what excites me about what we're doing. We can build something where we don't have to incentivize people to show up. We can create a product that's going to serve people. And like in our case, the end user doesn't actually even need to know that Spicenet exists. We'll just allow somebody
That's
to
ideal. Yeah,
that's more powerful, right?
Yeah, low friction.
Yeah,
low onboarding friction. You know, I think for us, we have a little more onboarding friction. You kind of want to understand how we work, and we're working through that on an educational front. But speculation by its very nature, like you need to have a sense of like there's a very bright future. Now, if someone can point objectively at something like the meme coin collapse of 2025 in the spring, like, it's really hard to convince a certain threshold of people that this time's different. If you're just launching another meme coin, now there's all these pump fund competitors coming out and they're sharing some of their revenue off with holders, launchers, creators. So there's going to be some energy and flow and attention and money and gambling going on. But I don't know, be the guy that calls them dead right before they go on another big run. I just don't know that you're ever going to get that same kind of insanity that we saw over the last year and a half, unless something fundamental changes in what's being speculated on. In this case, meme coins. Like, you know, attention's attention. It'll be there. Gamblers are gamblers. We're degenerate. We like to go and play there. But for an alt season, for a bubble, for another cycle, like, we're going to need more. We're going to need something more. I'm super excited to see what that is. I think I may have found it. But, you know, proof's in the pudding. We've got some time here. You know, I have a bit of a broader time horizon. I'm not worried about July and August. I'm not worried about October and November. I'm thinking, like, what does crypto look like in 2029, 2030, 2030s? You know, because if you can't convince me that you're going to create something that has staying power beyond 5 years, I'm not that interested. I'm not that interested. I'm just not. Hey, if you tell me you're going to go 100x next month, let's talk. Like I'll throw $5 in. Like, I'll speculate. I'll play with it. I'll fuck around with, like, you know, this little bit of the portfolio. But what I'm really here looking for, you know, focusing on energy into is sustainable. So it's got to be something big, paradigm shifting stuff. Anyways, yeah.
Thank you, guys. Thank you, guys. This has really been amazing. I'm so sad because I still have a lot of questions to ask, but we've spent a lot of time here. It was really amazing having you here with us, RT. Thank you for joining. Thank you for these hot takes. They were really spicy and hot.
Yes.
So thank you. And for those that joined us late, guest today was Izariti. He's the head of growth and operations at Nirvana. So go and follow Nirvana at Nirvana_FI on Twitter. Also follow Random Tags. His handle is being tagged in the post we made earlier on this episode of Spicy Takes. So thank you guys for joining us. And if you have any questions, you can still drop them in the comments. If we do have answers, I'm sure the speakers can go through the comments, answer a few after this episode. Thank you guys once more for joining. Thank you. Stay spicy. Bye.
Stay spicy, y'all. See you soon.
Take care, guys.
Thank you.
Thanks for having me on. Cheers.
Of course.
Bye.